Obviously, I'm Don Kaufman, and you're watching a TheoTrade presentation, a risk disclosure, not financial advisors nor a broker dealer. I spent a long time in the brokerage world. That's why I throw up this disclaimer. I'm out of the brokerage world as well. It's a copyright disclaimer. This is ours. This is not yours. Hey, listen, if you ever need to get a hold, okay, of any of us after today, just go to support@theotrade.com. I always throw that up there to make sure that everybody's, on the same page. If you need to get a hold of me, I answer emails. I promise you I answer emails. Just put Don in the heading, support@theotrade.com. This is our main office line. But again, we're based in Scottsdale, Arizona. Yes, we're hiding here in St. Croix. Does it matter where you are right now? It does not, because we're all on Zoom. All right, today we're going to learn some of the following skills, again, and more appropriately in a live trading environment. We're going to determine effective trade logic, okay? And that's a big thing I'm going to handle right up front. Learn how to cope with the risks and understand your portfolio exposure. We're going to talk about a couple of strategies to be deployed and why this is a pretty good time to go on the offense in the midst of some volatility. And we're also going to discover what skills you could be implementing and should be implementing and why these tactics. A lot of the stuff I'm going to cover today, this stuff's imperative. Like, that's one of the things I'm going to stress. Some of what I'm going to cover today is, hey, listen, this is how you could trade, but then there's some skills, and I'm going to make sure you guys understand what skills are imperative. Like, it's non-starters if you don't understand a handful of skills that I'm going to go through today. A couple of housekeeping items here. Listen, this is going to be a skill set. I am going to trade live. We'll see if there's some opportunities for you guys to hop in a couple of the trades that we're going to do. Again, I'm only really going to be on here, 90 minutes or so. So, I just say, hey, listen, focus, shut the door, turn off Skype chat, maybe whatever else is distracting you. Don't just close Facebook, just delete it all together, put your phone on silent mode, kick out the kids, definitely get rid of the kids, the grandkids, definitely get rid of those. And the dog can stay, the dog can stay. Listen, this is important. You took the time to be here. So here's a little background on me. I watched order flow for 15 years. I started trading in the late 90s. I come from a family of traders. Okay. I was, after trading in Chicago for about 2 years, I was invited to the startup firm Thinkorswim. You guys are actually going to see me use Thinkorswim a little bit today. And you're also going to see me use the Tastyworks platform a bit today. So I started, trading in Chicago, and I knew some traders, and they started Thinkorswim. I was employee about number 13. I was on the executive team when we took Thinkorswim public in 2007. We were acquired by TD Ameritrade. I went on, at that point, to run education for all of TD Ameritrade. And at that point in time, they had about 7 million clients. Boy, has that come a long way, right? And the one thing I always stress is, what I think makes this very unique is, yes, I have a risk manager and a market maker's perspective, but I also got to see order flow from the largest brokerage firm in the US at the time, specifically in trading. And I got to see all the order flow, and I got to see exactly what everybody else does, where people make mistakes. Listen, a lot of the education that comes here at TheoTrade, okay, comes from watching others' mistakes, the knowledge of really what works best for retail traders. So I still do some media appearances from time to time. This is actually the last time I was in Chicago, which is crazy. This is the longest period I've gone in my entire life, not having been in the Chicago area. I've got some pretty deep roots there. But I haven't been there literally since this appearance was the last time I was on set in Chicago for TD Ameritrade TV. This is actually an appearance on CNBC. It's, hey, listen, it's one of the more memorable appearances myself. Put it against Kevin O'Leary. By the way, I ruin it for everybody. Couldn't have been a nicer guy. Listen, I'm going to tell you briefly about TheoTrade now. I let everybody know this now right up front. First of all, what we do here at TheoTrade, we do everything. We do classes. We do coaching sessions. Coaching sessions is like continued education. We allow you to have email access to all of our instructors, including myself. Like, if you want to send me an email and bounce trading ideas off of us, okay? We have a live trading chat room. It's live right now, okay? You're going to get a taste of what we do in the live trading room and live trades throughout the course of today. We give you every indicator and scan you would ever need. And we also give you full mobile access. We text out trades to you, push notifications. I mean, the bottom line, when I say classes, We give you every class we've ever done here at TheoTrade. We give you every coaching session. There's 97 courses at TheoTrade, and we do it all for $297. It's not an introductory offer, okay, for 3 months. And I let everybody know this right up front. We have over 6,000 people on TheoTrade. Oh, here's the best part. It's not a membership anymore. We don't do memberships. It's $297 for 3 months, and you have to determine every 3 months whether you want to do it or not. We don't like memberships. We assume that you might not like a membership. So that's our only offer here at TheoTrade. And again, I like to be very prompt with that, very upfront about it. And you decide after you see today if it's something that you might want to do. So with that, hope that's all right with everybody. Let's jump into it here, okay? Some principles, some very key principles, okay? Some very, very key principles in here that I think are critical to your longer term success. And by the way, okay, I appreciate somebody saying, oh, stop the advertising, get on with it. Listen, every educator in this industry is going to try to sell people packages for tens of thousands of dollars. One of the reasons I hope that you respect what we do here at TheoTrade, for $297, there's nothing else in this industry, bar none, at any price. I don't care where you go, that'll do what we do here at that price and at any price. So with all due respect, I would appreciate it if people understood that coming in here, that's why I throw that up here. I like to be very forthright and say, don't do anything beyond $297 for 3 months. Anyway, TheoTrade principles. This is critical in respect to how you're actually going to approach the markets. And this is what we're going to spend a moment on before we dive into some live trading, because one of the first things that a lot of people are very surprised by in this business is, we jump into a trading application, and here is Thinkorswim. As I said, I'm also going to use Tastyworks. I trade extensively on Tastyworks on an intraday basis. Okay. Most people, though, are familiar with Thinkorswim. And again, this is the platform that I helped build for 15 years of my life. I worked, on the Thinkorswim platform and developing some of the tech on here. So I don't mind, taking people through this. So the first thing we do is we jump onto a platform. Everybody goes, okay, so what are we going to trade? Okay. It's more or less, we first have to determine what our trade logic is going to be. What our capital allocation is going to be, what our directional bias is going to be. One of the things I think that's so critical, okay, that you got to understand in here is that your approach to the markets is everything, okay? And I'm going to point that out as we go through. So trade logic, I say how you approach your markets. It's vastly more important than being right or wrong, okay? I mean, you think about this and you go, how many times have you been right, but you end up still losing money? And yeah, we can put stop orders and so forth. But the point that I'm making over here is this trade logic, it has to permeate, okay, everything that you do. And you're going to see that right now. The first step, let's define your strategy, all right? And break down some of the logic, okay? Ask yourself, though, in everything that you do, that if you were to do this 100 times, what might be your outcome? All right. And this is what I kind of always poke fun at. And there's a lot of what I call directionally challenged traders can still perform if given a better trade logic, if given a correct trade logic. So with this, when I start talking about trade logic, I think a lot of people kind of get deer in the headlights on me. Here, let's go in there. What do you guys want to do? You tell me. Anybody? What do you want to do? Okay. What do you guys want to do in terms of trading here? You tell me. Right? This is going to be some live trading. Somebody immediately puts in spiders. I'm cool with that. Okay. So we can go into the spiders. Let me make sure I'm actually in one of the right accounts. Okay. Somebody goes out and they immediately say, the spiders, what do you want to do? Let's buy them. Okay. Confirm and send. Here, look, I'm just going to fire off 100 shares of the spiders. Filled. Okay. By the way, everything I'm doing is on a live account. You can see all the execution prices, everything. So I went out and just filled 100 shares of the spiders. Okay. No commissions. It's free of commissions. Right? But what do we have over here? All right, what do we have? Again, we have a situation right now. We have a situation onto which if I were to do this trade 100 times, what's going to be my outcome, right? when you go out and you just buy stock, and especially short term, and by the way, I could do IWM, I could do all kinds of things in here, but especially short term, what has to happen for me in this particular setup, this logic, okay, for me to be able to make money? Seriously, like what has to happen for here for me to make money, for you to make money? And again, don't think about just one trade. Okay, there is a bottom line with this, and that's this: you go out, you buy shares. Okay, there's only really effectively one way on an intraday basis. That means you're in, you're out, you're on with your life that day. There's only one way to be able to make money, and that's what. Okay, you have to be what? You have to be right. Okay, and you have to be right today. Directional bias is everything. You know, I know people's eyes are just glued to my screen over here. You can be glued to the screen, that's fine. Okay, good. You have to be right in here to, in effect, make money. And when you think about what I just pointed out a moment ago, right? And again, I don't mind referencing this. Directional bias has to be tertiary, meaning it's the third thing down. Why? You got to have trade logic. We have to have some trade logic that just goes beyond the idea, all right, of what? I think we're going up. Because right now, listen, the market starts to move against you. You put in a stop order here, you know, before you know it, you're going to get taken in, you know, out of this marketplace. Again, I could go on for literally for hours about some of the inherent flaws, okay, in terms of strategy. And one of the flaws is people just go out there and they sling stock all day long and they think that they have a logic to it. Okay. But the primary logic is, well, I thought we were going to go up, and maybe you didn't trade 100 shares of the spider. Some people just go out and buy a couple shares of Amazon every day, a couple of shares of Google, right? This is an extraordinarily difficult life to live in. Does that make sense to everybody? All right. And I wanted to start with something incredibly straightforward, incredibly simplistic in respect to the fact that, you know, many people, when they first get involved in this business, they just might go out and buy or sell stock. And we're going to build a little bit more of an aggregated position in here, right? Take a look at Apple today. Right. And again, when I say take a look at Apple, immediately people go, oh, look at it on the chart. It's almost at the high. Okay. The only thing I see, it's up $5, which is way beyond what you would anticipate Apple to be, okay, on a trading day. I mean, that's a huge 4% move inside of Apple, which is lifting most of the marketplace. But for this example, I'm going to stick with the spiders. And the other thing I want you guys to know is that no one here has to put up some of the capital, okay, necessary to buy the spiders. There's so many different ways now that you can circumnavigate having to go out and to put up all that capital for the spiders. There's other trades that you can do. There's other products that you can use. And one of the things that I, again, will just push into you is that, you know, no matter what you might think about this business, all right, no matter what you might think, you have to be right if you trade pure stock. So with that, I am going to, for a moment, okay, discuss intraday options and some of the trade logic behind creating a viable intraday options strategy, right? So in order to create one, we're going to, you know, obviously a viable intraday trading strategy, I'm actually going to use options. And we're going to use, okay, a defined risk option strategy, as the trade is not going to have to be monitored throughout the course of the day. So you're not going to have to necessarily be glued to the screen. So if you have absolutely no options experience, just listen, no cause for concern here, right? Just going to take you through a very basic example. And I'm going to tell you right now, this is why you want to use options. And some people are still really opposed to this. Like, he said the O word. Okay, listen, minimal capital exposure. To trade with a couple of bucks at risk. Offer what? Weekly options expiration. In fact, we're looking at spiders, right? Take a look at these spiders. There's actually a Wednesday expiration. There's a Friday expiration. There's a Monday expiration. I mean, it's utopia. It's utopia for trading environment. Offer a really viable risk reward. There's no need for stop orders. Okay. You can trade this in an IRA, avoids just the mass risk and sheer magnitude of stocks or futures contracts. And the trade need not necessarily be monitored throughout the course of the day because it's such a nominal amount of risk. So a trader can produce returns far beyond the max risk in any given position. So I'm just going to explain for those of you, by the way, does anybody here have absolutely no options experience? Okay. Anybody brand new in here? Because I want to make sure that everybody's like kind of on the same page, as we get into this. For the most part right now, right? And I'm not going to spend much on these PowerPoints here, right? I like looking at this. So you know what? Here, we'll just do it right here. We'll just do the example right here. The spiders are trading right now, and I hope everybody can see this, right? And here you go. The spiders right now are trading, okay, roughly at 369. So the SPY is at 369, right? You can go out there and you can buy a 369 call, okay? And we're going to look at the price here in just a moment. Let's say we go out and we buy it for, all right, $1. We go out and we buy the 369 call for $1. What, okay, do we need the stock to do? What do we need that stock to do? Anybody? Okay, we need it to go up because you have the right to buy the stock then at 369. Everybody else in the world would have to what? Okay, pay what? Hey, if the stock went down, that's not good. If the stock went all the way up, and let's say all the way up to 371 today, now you have the right to buy the stock at 369. Everybody else in the world would have to pay 371. Okay, that option has to be worth a minimum of about $2. That's a minimum of $2. What I'm going to take you into right now, and again, for those of you that are just brand new, and I'm going to be frank with you here. Okay, I kind of want out of this stock position. So hey, buying and selling, look, losing $9 is just that easy. Okay, so I'm actually going to come in here and I'm going to open up an options chain. I'm going to open an options chain right now, and I'm going to fire off a position. Okay, rather readily. Okay, so just bear with me as I start to hop in here. Okay, we're going to look at a delta, and I'm going to tell you right now, I'm going to go after this. I'm actually going to buy a put, and I will explain why after the fact. All right. So I'm going out there and buying a put. I'm 210 bid and I'm filled. Okay. And I just purchased the 370 puts. Okay. So time out there for just a second. And I'll explain a lot about the nuts and bolts kind of behind this as I go along. Now, for some people, they're not necessarily comfortable trading puts. Okay. People, that is fine. One of the first things I want to mention, I'm going to come back over to the calls for a second, because even though I went out and bought a put, again, I want to explain it with calls, because that's where, again, most new traders have much more degrees of comfortability is on the call side of things. They go out there, they look at stuff like Tesla, like, I think it's going up. They look at, IWM, I think it's going up. Every tech stock out there, I think it's going up. In this case, though, right, I'm going to show you in a minute, and just bear with me. I'm going to show you in a few minutes why I actually bought the puts. Okay, I'll come back to that. But again, in this case, maybe you're taking the assumption. Maybe you're taking the assumption that you think that the spiders are going to rally. Okay, for me right now, the problem I have in this trading session, the spiders already have rallied. They've rallied massively. Okay, and with that massive rally, because they're up $4, it's a big move in the spiders. $4 move. It's hard to make a lot of money to the upside in a day that we're already up huge. Does that make sense to everybody that's kind of tuned in? And again, that's one of the reasons that I went out and bought the put out there. I just want to make sure that everybody comprehends that notion that what you are looking at right now, okay, isn't necessarily like, listen, I like to make nice and warm and fuzzy examples for everybody, but quite frankly, okay, we're in a live trading environment, and I'm going to do what's going to be best, in terms of the trade. Not always because hey, he's live in front of a couple thousand people. That doesn't worry me. I'm going to do what's best, okay, for the trading account. I'm always going to do what's best for the trading account. But I'm going to go back now and I'm going to explain why I'm doing, okay, in essence, what I'm doing. And I think that that is also critical. I want you to understand, again, a little bit about what I call trade logic. And as I was saying over here, here's an options logic example. We're going to go out and we're going to buy an option on an intraday basis. An intraday, that means you're going to get in, you're going to get out on the exact same day, all right? But the big question is, what option do you buy? What option do you buy, risk versus reward? So people think that they just go out there and randomly like, I'm going to buy this guy. I'm going to buy this guy. Okay. What's your reasoning behind that? And you got to get that stuff down pat. Like you have to understand, right? The logic behind trade has got to be more than just right or wrong. Because I'm going to stress this just 100 times over. Pick the wrong option, you're already dead. It's just that nobody told you. All right. So let me go ahead for just a moment. And I'm actually going to freeze the screen for a second. Literally going to, when I say freeze the screen, I'm going to freeze my screen, not your screen. Well, I'm going to freeze my screen. And I want you for just this first example. Okay. We're going to look at this option right here. And then listen, I'm doing this on the fly. And that basically means, okay, anything is possible, anything is plausible. We're going to be watching this marketplace. Again, I bought the put, but I'm explaining the call. Would you look at the spiders? They're up $4 in a day. But let's take the assumption that between the end of the day, that this marketplace could go up another $2 or down $2. Would everybody agree with that? That from right here, we go up $2 or down $2. Could that possibly happen between now and the end of the day, right? If it can, then this option, the option that I selected here, this is the 366 calls, okay? Because I'm trying to show you a little bit about, just a little bit about edge in this business. If you guys have ever heard the terminology edge, that's what I'm trying to display, okay? You want to figure out edge, understand this example. You just bought these and you bought them, let's say for 357, okay? What are they going to be worth if the market moves up $2 or down $2? The way to figure that out is to actually look, what if we actually move $2? The 366s would act like the 364s because they'd be $2 what we term in the money. So your option, okay, your option in fact would go from the value of 357 and it would jump, okay, to 530. Now, my screen is frozen over here, okay? So just bear with me as I actually bring up a little bit of a calculator. You know what? I'll bring the calculator up in a minute so that everybody sees the numbers, okay? So this is if we went our direction, we would literally go from what? 357 to 530. What if the market moved against me? The 357, okay, would be worth about 206. Now, okay, just if you could, you know, we're going to write those numbers down. So your what? Okay, your option could be worth 530, or your $3.50 option could be worth what? We'll call it 206. Now we want to start to evaluate risk reward in there. And this is one of the greatest ways to evaluate risk reward. Now, granted, I know I'm in a live market. Don't worry about the bid and offer. Don't look back. Remember, our option could be worth $5.30, of which we actually paid what? 357 equals $1.73. Okay. So in effort to explain this, a little bit, if the market moves $2 in our favored direction, we will make $1.73. Okay. Now let's go back over here. So we're going to make what? The $1.73. In fact, you know what? Let me actually leave that up there, make it a little easier for you guys to see. We'll make $1.73, okay, if the market moves up what? $2. Now, what happens if the market moves against us? Against us was our 357, okay? We'd be subtracting the 206 equals what? $1.51. So if we're right in the trade, we make $1.73. If we're dead wrong, okay, we're going to lose $1.51. That, people, okay, is why I wanted to enunciate a little bit about options selection criteria. And what that basically means is in this particular trade right now, you do have approximately 20 cents of initial edge. Again, assuming that we made a $2 move up and a $2 move down. Now, when you look at this, you're like, that's not exactly like wonderful. Does it beat stock? Okay. Let me just pause right there for a second. Does it beat stock? Because in stock, you go out and buy 100 shares. Every dollar we move up, you make $1. Every dollar we move down, you lose $1. Okay. over time, if you're not right, you're going to what? You will absolutely unequivocally lose money, right? In this particular example, though, and I think that that's what, we're trying to baseline for a second, okay? In this example, what can happen? You actually have about 20 cents of edge in the initiation of the strategy. And again, when I ask that question, this is where things get kind of quiet over here. Does that make sense to everybody? Okay. And I'm going to get dead quiet for a second because I want to make sure that everybody's on the same page. Because when people ask about how and why we trade certain options, what I got to stress to you is about options, right? It's about the logic. It's about 100 trades later. So in the scenario that I just presented, and I'm going to do another one here in a second. I'm actually going to take you through another scenario, another underlying, okay? You need to create a trade setup whereby you can be right even 50% of the time and still see not necessarily a lot of profitability, but a degree of profitability. I know that everybody here wants to hear, like, I know you guys listen. That's why I got, I get upset because people come here and they hear delusions of grandeur before coming to TheoTrade. They hear things like, I'm going to be driving a Ferrari, or somebody's like literally like doing a video like in a Rolls Royce, and it absolutely like infuriates me. Okay. Meanwhile, I'm actually telling you guys, hey, by the way, I'm living down here in the US Virgin Islands in St. Croix. Want to know why I'm living in St. Croix? Because there's a bunch of traders that live down here. Okay. I've known these guys for almost 20 years, and there's an entire little like group of traders that live and trade, okay, out of the Virgin Islands. There's actually good internet down here too. It's kind of crazy. But the point I'm making with this is, like, I don't want you guys to have delusions of grandeur. I want you to understand, okay, you do 100 trades and be right 50% of the time and still come out ahead. Does that interest you? Because this is what trading is about. Like the trade logic implications of constructing any intraday trade. The option selection criteria, it's imperative. If you can't be right less than 50% of the time and still come out ahead, you're already dead. Can your strategy do that? You have to get the logic down. And that's why I'm just so like crazy about that. Whenever I talk about like trade logic, it's because it's infuriating. People like, I always use like the same stocks. I think Twitter is always a good example because there's a lot of volatility in Twitter. And I love to show stuff like, trade logic examples. You look at something like Twitter. Twitter actually makes it super freaking easy to understand. Like Twitter hasn't moved at all today, which is, I think, again, a fairly good example. Like if this stock were to move, okay, and start to really, rock out there like $1. Here, you guys want to see what this looks like? Here we go. If this thing went up $1, it would be worth 222. And if the option basically fell out of the money, okay, it would be right here, worth basically what? 91 cents. So if you're right in this example, your option goes from $1.47 to 222. So you go boop, 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 boop. What are you? Okay, about 75 cents. So if you're right, you're going to make 75 cents. But if you're wrong, what are you going to lose? Okay, about 60 cents. There's edge there. There's edge. Okay, it's all about finding edge. It's about selection of the right option. And again, are we good? Are we good over here? Yeah. Okay. So what we're looking for here is every time we're right, okay, we're making about what? 75 cents. And every time we're wrong, in this case, we're only losing, okay, let's say about 60 cents. Now I want you to take that up here. Every time you're right, you're going to make 75 cents. And every time you're wrong, okay, you're going to lose about 60 cents. Now, be right, be wrong, okay? Heads, you're right, tails, you're wrong. So you're wrong, you lose 60 cents. You're wrong, okay? You lose 60 cents. You're wrong, you lose 60 cents. Then all of a sudden, you're right here, you make 75 cents. You're right here, you make 75 cents, okay? You're right here, you make 75 cents. The point I'm making, even if you went out and started flipping a coin to decide direction, after heads, you're right, tails, you're wrong, after you did 100 plus occurrences, how do you look in terms of P&L? And the answer is phenomenal, because in this example, and this is real, I mean, it's a real trade. In that example, okay, you have everything in your favor. There's 15 cents of edge in the options that you're trading, right? We okay? Because again, I could just go out and I could fire trades like a mad monkey in here, but this is the point to be made right off the bat. Now, okay, now everybody always asks, like, well, we can look here at something like the financials. Look at these things. They're up 50 cents today. Now, I don't mind saying I already have a very substantial position inside of the financials here. I'm actually short the financials, short about 1,000 shares of those already. It doesn't make a lot of sense for me to jump out there and, feel the need to necessarily trade more. But the first trade that I popped on today that I would say is a real trade is right here inside of the spiders, okay? And I bought, instead of buying calls because I think we're going to go up, okay? I don't think anything. I look at this and say, we're already up $4. I think that there's less risk, okay, in being able to buy a put. Does anybody know why? Right? Anybody? Okay. Anybody. So when you do this, by the way, somebody said in here, seriously, nobody trades the same instrument with the same delta every time 100 times in a row. Really? Because I made markets for years, and that's exactly what we do. I trade the exact same delta on different instruments. You don't have to trade the same instrument, okay? You must trade different instruments, and that's fine, okay? So you could trade anything you want in here, but the delta you select, the option you select is absolutely critical because it defines the risk reward, all right? And it's absolutely critical. So I asked a question in here, and I think it's actually kind of a cool question. Somebody said, I said, why did I go out and buy the put? Why did I buy the put instead of buying the calls? Okay. And could be implied volatility skew, a little bit of that. I like, actually, somebody said the market falls faster than it rises. Okay. Cindy said it'll probably go down. It could be any of these, right? I'm actually going to show you a very statistical reason. One of the things that I like to bring to the table here. So at TheoTrade, I am a quantitative strategist, right? I don't sit here and look at the charts all day. Now, we have Jeff Bierman, and we've got Brandon Chapman and Blake Young and Steve Miller, which is Slim Miller. Okay. And again, all of these, and Corey Rosenblum and Tony Rago, many of them look at charts and look at charts extensively, right? Okay. I'm not going to be your chart guy. What I will do is I will absolutely use what's called Quantix. Okay. Quantix is a quantitative, all right, finance tool. And what it does is it actually aggregates and compares ticks in here. So I can explain that a little bit later. All right. This is actually rather bullish, but I think that our time today is better spent understanding, okay, why on earth in this big up day did I actually create a bearish trade? Do I know anything? In this particular stance, I would like to say, okay, absolutely unequivocally no. I don't know anything in this case, right? Like I literally, okay, I don't know. When I say I don't know anything, I don't know what the remainder of this day might look like. This marketplace could continue to perpetuate itself higher. Maybe that's not the answer you're looking for, but I'll tell you exactly why I actually went out and purchased a put. For intraday traders, they should always understand this, okay? Look at everything in terms of a standard deviation, okay? Where did this market come from today? It came from a price point of about 365, right? Where is it currently trading? It's all the way up here at about what? 369, right? So if you look at this from a standard deviation standpoint, okay, the marketplace is way stretched to the upside. I mean, it's already up $4.22 today, okay, on the spiders. And again, I'm just elaborating upon only what you see on the screen. So at this point, in terms, okay, of risk reward, if you look at this and say, can the market continue to perpetuate itself higher? The answer is absolutely, unequivocally, yes. The marketplace could continue, okay, to rally higher. However, okay, the means to which rally higher would be greatly diminished. If I said right now we're at 369, we've already been up $4, okay, could we go up another $4? The answer is yeah, we could go up another $4. But let me ask you something. What is the probability, okay, of that occurrence? Right? What's the probability? of that occurrence? Anybody? Okay. It's greatly diminished. I mean, already being up $4 is actually an achievement in terms of probability. But if you look at this from a pure probability standpoint, and again, I'm not going to sit here and I'm not going to throw out to you MACDs and Fibonacci's and Bollinger Bands, stochastics, okay? Elliott wave, you're not going to hear any of that here. All right. I'm just going to show you without going, I could get into absolutely definitive probabilities here without going too much deeper. The probability of going up another $4, okay, is probably less than ordinate of like 1%, right? It's that low. So from a risk reward standpoint, shorting up here is going to carry less upside risk for me, right? Because the risk is diminished versus there could be phenomenal downside potential. It doesn't mean that there is phenomenal downside potential, okay? It's one of the things that you have to understand, okay, about this business is the business is more than open up an option chain and say, I think we're going up. By the way, there's plenty of traders and plenty of strategies, and I don't want to diminish anybody's strategy here, but there's plenty of strategies that say, I just want to make a few points to the upside. That's not what I'm trying to do here. What I'm actually trying to do here is to take a very small, very measured amount of risk. In this particular case, I went out and I bought this put, okay? And I paid roughly 210 for it. And so that's what it's worth right now. It's worth 210, okay? And I wanted to leave it on to try to hit a grand slam home run. That is the logic I'm using today. And I'm not going to sit here, okay, and patronize you with the idea that I'm going to watch the screen all day. Are we going to go down? Are we going to go down? Are we going to go down? I'm going to put it on because the trade has got solid logic. I'm going to put it on because I think it has viable risk reward. I'm going to put it on because the probability, okay, of us going up is diminished versus going down. And again, when I say the probability is diminished, you're already up $4, okay? Let's get crazy. Let's go up another 2. We could go up another 2 from here, okay? But on the flip side, could you imagine if we reversed? That's what happened yesterday. Yesterday, the marketplace was up, almost up here. What happened? It ended up down, okay, on the day. How much? Well, the spiders were actually down a full dollar on the day. That would be a reversal by $5. That's the kind of thing that I'm talking about in this scenario. Because listen, is that always the trade setup for me? Absolutely not. But that's the trade setup right now. Okay. And that's where, again, understanding this distribution curve, we're already up here. Again, we can go up another $2. But if what happened yesterday, we ended up down $1, okay, that would be a grand slam home run because we would move $5 in my favor, right? $5 in our favor. Now, all right. Like somebody said, how did you get like the 1% probability? So what are the chances of the marketplace going up another $4? You guys want to see that? Anybody? What are the chances of the marketplace going up? Another full $4. First of all, this is tomorrow's option, so this is actually not going to be an accurate example, but you can actually pull up what's called probability of touching, okay? I like it. This is a good question. You can pull up probability of touching, and you can actually start to slide out on the scale, assuming though that you only have, again, you only have what, about 2 hours left in the trading day. So if you assume that you only have 2 hours left in the trading day, these probabilities are not necessarily, accurate for that. Okay, you have to go $1, $2, $3, $4. Look to the 366s. Okay, probability of touching tomorrow is 53%. In the next 2 hours, okay, is literally next to nothing. It is an incredibly diminished probability of that occurrence happening, and that's, you start to learn to use things like probability of touching. By the way, a lot of the equations that are built here in Thinkorswim, probability of touching, expected move, this is stuff I worked on, for almost my entire career. The last 5 years, obviously, we built TheoTrade. Prior to that, though, we sit in a room and you come up with different ways to extrapolate, market moves. And one of those is probability of touching, and the other one's expected move. Okay. Hopefully that's helps a couple of people in there. Ricardo had that question over there, and again, all of these probabilities, like this, that's what trading really breaks down to. Like, and people, they just rarely get to that level. So you guys want to do another one? Give me another underlying, okay? Give me another underlying here, and we'll go out and fire off a couple more trades. Anybody? So somebody always inevitably mentions like Tesla. Okay, I could do the QQQ. You know, I've got a lot of positions on Home Depot already. I always like to bring up Tesla. Do I trade Tesla? Yeah, I've got a couple of positions on Tesla right now. Okay. I've got an interesting one that I could probably trade against. So what this is I bought an out of the money put spread. Okay. You know what's fun? I usually ask that question, you know, what does everybody want to trade? And everybody's like, Tesla, Tesla. You know, interesting irony today is not one person mentioned Tesla. I'm disappointed. Anyway, when I look at something like Tesla, okay, it is with a very careful hand that we ever step into Tesla. Okay, Tesla is for somebody that is willing to obviously take a little bit more risk. Tesla is something that, again, it can be a formidable underlying, but I'll give you a kind of a fun trade that I have been doing, okay, kind of week in and week out inside of Tesla lately. All right. I've been going out and I have been selling. In fact, I'll come over to the monitor tab, the account statement. Okay, so you can see everything that I'm doing in here. I don't mind showing, you know, P&L, everything. Okay, I'm the full Monty. So this is just the last few days inside of Tesla. Okay, I went out and I sold a 950 call and I sold it for $3.90, and then I took that money and I bought a put spread for $4. So it's a trade. It's a bearish trade. This is an outright bearish trade in Tesla. Okay. But then I went back and I closed the 950 call for 65 cents. So where we're at, and again, this gets a little bit intricate. And if you're a little newer here, you're like, I'm totally lost. Okay. I have a spread that is left on here, but the spread, I effectively have paid next to nothing for it. Okay. I've pretty much paid nothing for it because I went out and sold something to finance the cost of this. And this spread is a 515, 500. So the only way that I can make money on this, and I want to show you this, this is a 515, 500 spread. You can see I've got a position on it. The only way I can make money on this is if Tesla came down, okay, below 500. Because again, I have a 515, 500 spread. Tesla would have to come down below 500, and it would have to happen in the next 3 days. Okay. And if it did, how much would I make? I could make as much as $15. What did I pay for that? Next to nothing. I paid a couple of pennies and I could make as much as $15. Now, is that going to happen? Anybody? You guys tell me. What is the probability of Tesla coming under 500 in the next 3 days? This is what live trading is about. You know, listen, I don't dictate what the market conditions are going to be, but this is what live trading is about. Okay. Well, the answer is found right here. It's called the probability of touching. Freeze the screen for a second. The probability of touching the 500 level, okay, is exactly 9%. That's the probability of touching. That doesn't mean it's necessarily going to land under there. Okay, the probability of touching is about 9%, which is really, really low. But if we do, I'm going to make $15. But I'll tell you what, I don't think that's going to happen. I don't think it's going to happen. And because I don't think it's going to happen, what I'm going to do is I'm actually going to sell another option against it. Okay, and I'm going to show you exactly why. Look at the market here. Okay, I'm highlighting the option right now. The market's $1.01 and $1.09. And I want to show you a little bit about how, okay, markets work. So the market's $1.01 and $1.09. I'm going to come in here at $1.07. Okay, $1.01, $1.09. I'm going to come in at $1.07, which is immediately going to change the marketplace to $1.07. Ready? Confirm and send. That market's now going to be $1.07. Why? How could I possibly know that? Because now I, okay, am the what? There's best bid, best offer. And if you know how the marketplace works, and this is, again, I come from a market making background, but I also come from a brokerage background. And if you understand how the marketplace works, and that's exactly what we're going to do here for a couple of minutes, because I think this stuff is imperative. You know, like if you want to succeed in this business, you have to understand that you have the ability, okay, to step ahead of everybody else. Look, the market was $1.02, $1.09. Now I'm $1.02, $1.07. I'm real close to filling here, people. Okay, looks like I'm going to fill. I am next in line. I'm just going to cross my arms right now. Okay, bring it. Market's $1.04, $1.12. I'm $1.07 on the offer. I'm on the offer. I am the only one offering. I'm the only one standing between Tesla being held up, okay, on this particular strike. If they want to trade this option, somebody wants to buy it, they have to trade through me first, okay? They literally have to trade through me first. So let's actually come back to the option, okay, because I haven't filled yet. I haven't filled yet, and I'm knocking down the number of strikes to make it a little easier, okay? So we're $1.03 to $1.07, and I can come in here, right? And I'm not filling, and I'm like, not filling, I'm not filling, and cancel replace. Now I want you to watch that $1.07. You ready? I'm gonna come in here to $1.06, okay? It's gonna move the market to $1.06 where they must fill me. That's the rule, filled. Now they're gonna bounce it back to $1.09. So I filled, okay, at $1.06, and you're like, that's freaking amazing. How the hell could you get a fill so good? It's just understanding, all right, how the algorithms and market making side of the business works. So what I basically did is I went in between the bid and the offer. I became the offer. Now I can come in here and create an opposing order. When I say an opposing order and I say, listen, I just sold it at $1.06. Could I come in here and buy it back, for instance, for $1.05? That wouldn't really be profitable, okay? Or even $1.04. See, the market now is $1.03 to $1.12. I'll come in here to $1.04. Okay, just to show you. Now they're going to make that market $1.04. You are the marketplace, okay? If I'm willing to make the best bid or best offer, I am the marketplace at that point. Now, I'm going to cancel this order because I actually want that trade. So what I have here, and I want to show you, okay, a little bit about intraday trade. You want to get better in this business, got to understand stuff like this. For me, I went out there and I did the scariest thing in this entire business. Okay, what did I do? I sold, okay, a naked put in Tesla. Okay, I just sold a naked put in Tesla. That's the scariest thing you could possibly do in this entire business, bar none, right? That's people like, oh, that's really great. You just did the scariest thing I've ever done. By the way, this is one where, yeah, you might not want to run home and do that, okay? But why did I do it? Because I know one thing. See this spread right here? Okay. For me to lose money at 485, we have to pass through my spread. My spread right here, for me to pass through the spread, I would have to make $15 before I could lose anything on the 485s, which basically gives me a free ride. Got to get brighter in this business. Okay. This is like a free ride. Why wouldn't I do it? I just sold that way, by the way, for what? You know, $1 and change over here. Look, okay, I sold it for $1.04. I could buy it back for $1 right now. And I'll sit here sometimes and I'll scalp a couple of pennies throughout the course of the day, and I'll do some more contract size than I typically do. Just to make a quick point though, I went out there, okay? I went out there and I sold this thing for $1.06. I apologize. I sold it for $1.06, okay? What could I buy it back for right now? Now, if you get this, and again, I'm going to show you the position, all right? I went out there and I'm just scalping some one lots right now. I sold the option, okay, just a moment ago for $1.06. What can I now buy it back for? And it looks like I could probably buy this thing back. Watch, I'm going to come in at 98 cents. So if you sell something for $1.06, in fact, I might be able to even get it for 97 cents. Okay. Let's come back in at 97 cents. Now I'm the best bid at 97 cents. Now I know almost for sure that if I cancel replace, I can come in at 98 cents. Okay. And I can probably fill right and around this. There I am at 98 cents. So they have to trade through me if they want to do anything in there. Okay. I am now the best bid on the street at that particular level. Look, I'm the only one in here, right? Somebody just matched me at 4 contracts, but I'm comfortable. They got to trade through me right now, and that thing is going to happen. There I am. I'm right up to the top of the screen. We'll see if I actually fill in the next couple of seconds. The point that I'm trying to make is that trading, it doesn't have to be, okay? It doesn't have to be like this hair-raising experience. It doesn't have to be, you know, all about being right or being wrong. You think I'm right here in Tesla? I don't give a crap. I don't care what happens in Tesla, okay? I got this spread for free. And because I got this spread for free, it affords me the ability to be able to trade this option that's out of the money all day long. I could sell it, I could buy it, I could buy it, I could sell it. And you know what? I have almost squat in terms of risk on there. Now I've done it again already 16 days out. 16 days out, okay? I sold this option yesterday. Look, I sold it yesterday. I sold it for $4.25. I sold that option for $4.25. I could buy it back right now for what? Okay. $1.83. By the way, I just closed the other Tesla position. So what you just saw, okay, it's gone. So I just went out there, and again, a little bit of live trading, and there's not a lot of P&L in here right now. What I'm showing you is technique. And I don't want you to come here and like, oh, I want to see something big happen. Okay. All we're trying to show you is a little bit about order routing technique. And to take you through that real quick, let me actually detach my order book, just show you really quick in this account. I went out, again, I started here with some spiders, okay? But in Tesla, okay, I went out and sold something for $1.06, right? And that something was at, 51 after, and literally 4 minutes later, I closed it for 98 cents. It doesn't matter that's, it's 8 or it's $10 or whatever, okay? If you understand how to use these options correctly, if you understand, okay, what we're actually doing in here, it's, again, this is the step that you need to take. And every single one of you, and I actually appreciate what somebody said when they came in here. It's so frustrating. I wish I totally understood. Okay. But, listen, this takes time. Okay. It absolutely takes time. But this is what trading is about. It's not about sitting here going like, oh, what do you think Tesla's going to do? Okay. I'm telling you, with this trade, I got no clue. But I went out and I had the ability to sell something, okay, at an unbelievable price yesterday at 425. By the way, what has Tesla done? I just want to show you something in the last 24 hours. I put on a bearish trade in Tesla. In the last 24 hours, the stock has actually gone up. It's gone up. My bearish trade has actually made $241, okay? And it afforded me the ability to now trade other options against it. And that's one of the key points to be made. I could buy and sell stuff against it, okay? I'm scalping in and scalping out. And I'm not here to tell you that I know what's going to occur in terms of directional bias. And that's why I say, and I'll jump back to this for a second. I go, can your strategy do this? You got to think about all the implications of selecting a strategy, okay, that can provide a degree of edge in the markets before we've even discussed direction of the markets. Like, this is what trade logic is about, right? And again, I get that if you're new here, okay, if you're new here and you've never traded before, this is definitely an approach that you're probably not per se familiar with. Let's go in and let's actually trade a couple more things before we go any further. By the way, the S&Ps, this has been so lackluster. I knew this was going to happen on this session. That's why I actually I want to move over to Tesla, because we went out and we bought some puts and they haven't done anything. They haven't moved. Okay, I mean, they moved like a couple of pennies over here. So we sit tight a little bit and we'll wait and see how those things kind of mature as the day kind of goes on. All right. So a couple of other products, right, that we're going in over here. Oh, I love this. Somebody was asking, is Delta the primary Greek that you consider? So Delta is important in options, but it's not as important as that. You have to look at the implied volatility. You've got to understand a little bit, obviously, about the Delta. And that's the stuff, people ask, like, what do we do at TheoTrade? That's the stuff we do. That's why I said right to begin with, we do this every single day. We literally just trade live with people every single day. And I come on for an hour. And then Jeff Bierman comes on for an hour. Then Blake Young comes on for an hour. Okay. And then we just go and go and go and go. We do 6.5 hours a day with literally different instructors and different styles. And everybody just fires off live positions. Some of it is pure education and some of it is pure live trading. That's one of the things that, I mean, that's why I threw that in there and, bounce ideas off of us. That's what we want. Okay. But the most important takeaway over here is that, okay, if you're fixating on what the next move of this marketplace is going to be, okay, I'll be honest with you, that makes for good TV. It really, really does. And then I don't want to be, facetious in saying that, but even I come on to some nightly videos and I'm like, listen, I'm a little bearish and I'm a little bullish. I'm carrying bearish positions, but that's not what I do on an intraday basis. That's not what I do in terms of risk management. People that get fixated, okay, on what the next move of the marketplace is going to be, all right, end up in a very rough scenario all of the time, because it's only a matter of time before the marketplace runs you over. And I'm going to be very frank with you here in stating that, okay, this option I paid $210 for, but still my heart, it's only worth $1.96. Okay, that's fine. we already rationalized that the marketplace could possibly go up another $1, maybe $2. And if I wasn't comfortable with that risk, I never would have gone out and purchased this option that I'm down a whopping 10 cents on. It's fine. Okay. And if I looked at something like Tesla, and I'll revert back to Tesla again, okay, because I think Tesla is such a slick little position that you can come out here and you're like, look, the option that I bought back over here, okay, couldn't I just do that again? Like what I just did a moment ago, I could just do it again. I mean, if Tesla continues to move over here, I'll go out there and try to sell that option. Let's just try to sell it now for 99 cents, right? Look, they're going to move this to 99. There it is. Okay, it's 99. So I'm just going to leave that in there. I don't care if I get filled or not. You got to trade small enough that you just don't care. Okay, you do, because that's the only way to build, okay, stability, to build consistency in this business, right? And that's, again, this is what this trade logic is all about. Now, what our members are saying, I like this, and I put this actually in the PowerPoint over here because it's from this guy, Jamie G. He said, I trade pretty small, okay? I like the intraday options because chances are your losses will be small, okay, and your winners big. And I put this in here because he said, I've made 10 QQQ intraday trades the past few weeks. I lost 7 of them, okay? By the way, I'm gonna be very forthright. He was following my trades. So this guy's following my trades. I am dead wrong 7 of the times, but I'm profitable because the winners were huge. That is the setup that I used today. Okay, by the way, if you guys want to trade the QQQ too, I can come over here and I can actually fly into the QQQ. I mean, this would just be kind of adding to the risk that I've already put on. But the QQQ, you gotta go a little deeper in the money over here to get that good and viable risk reward. And this is only like if you thought the QQQs were going to come down, but I don't like this trade in the Qs. I'm going to tell you why I don't like the trade today in the QQQ. I don't like the trade in the QQQ because it's up only 0.7%, where the S&Ps are up 0.17%. Okay, the Russell is up almost 2%. So if I were going to do another strategy today, I would probably want to put on something, okay, that were already up the 2%. And you can see I've already got positions in here. So no need to further add to the risk of what I already have on, okay, because I'm literally already positioned. If the Russell pulls back today, I'll be gold, Jerry, gold. So I'm going to sit tight with the positions I have on. Anyway, I love that particular saying over there that, again, and you know what, I appreciate somebody came in there and says, love the fact that your trading style, I'm never binary, okay? And I like that somebody says that because they see exactly what I'm at. Everything that most people do in this business is binary, and that means they're right, they make money, they're wrong, they lose money. But the problem is that most people, when they're wrong, okay, they lose a hell of a lot more than when they're right, a hell of a lot more when they're wrong, okay? And they even add the losses and just go down with the ship. Okay, you got to stay on the right side of things. You got to learn in this business to do more of what works and less of what does not work. Okay, that is one of the most simplistic sayings that I heard probably the first week I was involved in this business. And I come from a family of traders, but I asked a guy that I'm still to this day with, really, really close friends. And when I was brand new on the trading floor, said, what do you do? Okay, what do you do down here? Pretty much that was it. What do you do down here? And he says, look, I filled in Tesla again. So I said, what do you do down here? He says, I do more of what works and less of what does not. And I laughed about it at the time. I'm, thanks, man. Thanks for that piece of crap insight. And here I am like 22 years later, and I'm like, do more of what works and less of what doesn't. Okay, because you will learn that people that are binary in the marketplace, okay, they tell the tale of like the biggest bullish market. And then when the marketplace turns into more volatile, they tell the tale of horrific, hits that they took. So I don't want you to think that I do not look at directional bias, because I do, but most traders are very myopic. All right. So they go out there and they focus on one product or one stock, or, when I say myopic, and again, I am trying to come up with that's a little bit of a negative connotation. All right. So, and we're going to talk about, somebody just said, what makes you get into the trade? It's exactly what we're going to look at. What makes me tick? When I say, first of all, that we look at something that's very myopic. If you looked at something like Facebook, Okay, let's look at an intraday chart for a second. Intraday chart. If you could just see this chart today, just see this chart, you're like, trend down, you're like, duck and cover, we're going down. Or you look at something like Amazon, and I'm trying to get you guys to bite on this one. You looked at this earlier today, you're like, trend down day. The Facebook was down, the Amazon was down, even Tesla was down on the day. Look at this, okay? That's a wild move to the downside. What myopic means is that you're focusing on one chart, one idea, okay? And before you know it, this thing bounced right back up in your face. This thing, I mean, it ripped from some of the session like lows over here. And look at the IW, or I should say the financials. Look at the financials. Oh, wicked sell-off. Yeah, wicked sell-off right before they ripped up in your face. I mean, that's a big move back to the upside, and nobody saw it coming. So one of the things I try to stay away from, okay, I don't look at one chart, one product. By the way, I call everything products. I don't care, like stocks, options, futures. If somebody who isn't here was even talking about cryptocurrency and so forth, it's fine. Okay, it's all the same stuff, and it is all the same stuff. You're like, but I have to understand. Listen, you could trade crypto futures, like just because I'm trading on this platform. But it is what it is. Everything in this business, you can be bought or sold. You just have to trade liquid markets. You got to trade liquid markets, right? So I'm going to give you a little bit about a quantitative. So again, I'm a quant, and that means I'm kind of a trader math geek. Everything has to have probabilities. Everything has to have outcomes for me. I don't rely typically on charts. I'll look at it. I don't rely on studies. I rely on probabilities, relationships, statistical edge. Okay. If you tell me I think the market's going down, I'll just be like, yeah, whatever, man. I don't really care what you say. I literally, it will fall on deaf ears. And I don't mean to say that to be dismissive, but it will fall on deaf ears. I've been around this business since the late 90s. And actually, I've been around it since my entire life. Again, I have an uncle that was a market maker that eventually he owned over 500 seats on exchanges worldwide. If you're from Chicago, you've heard of the firm. It's called O'Connor and Associates. He built it. He was the founding, partner of O'Connor and Associates. So they own 500 seats. O'Connor, to this day, it's a division of UBS. He sold the company in 1992 to the Swiss bank, and the rest is kind of history. He walked away a multi-billionaire, and how I got involved in this business. I don't know, if you have an uncle that's a billionaire trading, it kind of is alluring. And I ended up in Chicago. I started actually working in Chicago 3 weeks outside of college. And everything I've ever learned in this business, quantitative probabilities, okay? Even when I went to work for Thinkorswim and TD Ameritrade, everybody I worked with was quants and probabilities. It's what the business has always been. But then you get this like new generation of people looking at MACDs and Fibonacci's. There's nothing wrong with that, okay? We went out of our way here at TheoTrade to hire a bunch of people that were into charts, but that's not me, okay? If you're not familiar though with quant, that's fine, don't worry, okay? The markets, they speak volumes. Like trading, again, it has to be about reading relationships, reading market relationships, probability-based outcomes. And even intraday trading has probability-based outcomes. Like we're going to look at a few things and create a probability-based outcome. When I say look at a couple of things, this is like an intraday checklist. Now, all I'm going to do right now, hey, listen, I just want to scrape the surface, okay, of what I do, okay? I just want to scrape the surface of what I do in here. By the way, I like what somebody asked. Can you review your stance on published volume, okay, versus dark pools? So I'll tell you what about volume. I actually appreciate that question. So I'm going to come back to this in a second. Okay, volume in stock and dark pools. Dark pools, by the way, are I've actually helped build some dark pool technology in early years of Thinkorswim. There was a platform called Pipes, which is now called ThinkPipes, that we developed a bunch of algorithms that are still used by dark pools to this very day, like VWAPs and sprays, and everybody that understands, that professional world. I was in it. I was in it for 15 years, right? So in the dark pools, okay, there's so much mystery behind dark pools, but I'm going to tell you what, where the volume counts and where you can't hide volume. I'll tell you right now, look at the futures contracts. Can't hide anything in futures contracts because the Chicago Mercantile Exchange has completely different rules. If you really want to see what the professionals are doing and you really want to assess volume, you look here, okay, into the futures contracts, which is the cleanest volume possible. Now, if you look at stock volume, okay, stock volume now must be reported to the consolidated tape. The rules have actually changed recently, so even dark pools, they must report, but they can actually delay that report, meaning the volume can be delayed. If you actually look at what's called time and sales, they can delay that by a few seconds. But nobody even trades big anymore. Everybody hides all their size. This is the stuff, again, dreams are made of. All right, now back to the idea of the intraday checklist. I know I'm jumping around a lot of caffeine. I wanted to do a lot in this session. That's exactly what I'm going to do, okay? We're going to create an intraday checklist. And here's what an intraday checklist means. And as I said, okay, there's no way, okay, that you're going to understand everything I'm discussing right now. So please understand, all I want to do is scrape the surface here and leave you with the impression of what does this intraday checklist amount to? Like, what am I doing? What a quantitative trader might do, all right, on an intraday basis. And by the way, if you like this indicator that I'm using, this indicator here is actually called Quantix, right? See right here? And again, I'll put it up here. It's called Quantix. Quantix. If you like this particular indicator, I will give it to you. Wait right until the end, okay, today. I mean, literally right to the end. I will give you a web address, all right? I will give you a site, and you can actually go ahead and download Quantix, because I don't think it's fair. Like, I'm not going to mention it and then not give it to you, because that's just, I can't stand, again, as I was saying, like starting with all these education firms are like, I want to sell you a class, I'm going to sell you indicator, I'm going to sell you another indicator, another class. We don't do any of that. You just give people like this indicator, you need it. You need it. It's Quantix, okay? Quantix right now is actually displaying a very bullish scenario. So what quants would do for intraday, okay? Let's assume that we look, let's call it, we don't have to call these products. Let's say we look at 10 things, okay? I like to call it things. We're going to look at 10 things. What things? We're going to look at the S&P futures. We're going to look at a little bit of NASDAQ futures. We're going to look at the Russell futures, okay? We're going to look at volatility. We're going to look at the bonds. We're going to look at the financials. We're going to look at what we term the monsters of tech. We're going to look at Quantix. What I'm doing is going through an intraday checklist. And in this checklist, this says, okay, bullish, bull, check, check, check. Now, if you look at 10 things and 9 out of the 10 of them, okay, and we're not assigning any weight to any one more than the other, but 9 out of the 10 things that I'm looking at say, okay, bullish, what do you think my probability is going to be? Like a 90% chance that at least for the foreseeable future, barring any crazy news, that we're actually going to be bullish to the close. This is exactly what I wanted to explain in terms of directional bias. When we talk about like an intraday checklist is going through, boom, what are the financials doing? Boom, what's the energy sector doing? Okay. If you know the correct things, I'll call them products or things to watch and what to look for, you can actually create what they term a probability-based outcome and a really viable intraday trade setup. Does this make sense to everybody? I also, by the way, I look at the S&P 100 advanced decline line, screaming bullish. Quantix, screaming bullish. Financials, flying, okay? All right, the S&Ps. Now, the funny thing is, then everybody immediately asks, well, why weren't you bullish in your trade? Okay, this was a bullish trade. Earlier in the day, everything was straight up. It was, projecting that we're going to continue to rally up. Had I actually done this session, say 9 o'clock in the morning, well, 9 in the morning, of course, in terms of like central time, like a half hour after the close, this would have been a very bullish trade. Obviously, we don't, we're not afforded the hindsight in there. Nevertheless, the point that I'm trying to make is probability-based outcomes can just be a phenomenal tool for intraday success. And again, that's some of the key factors to your intraday success. First, you have to employ a viable trade logic as displayed with the use of options. And that's something I tried to reiterate, okay? Then you want to use a multitude of quantitative indicators to assist you in creating a higher probability trade setup. Or, okay, or if you're more, hey, maybe I'm a non-directional kind of person. As I said before, like if I wanted to do something in Tesla, I'll just keep trading Tesla back and forth throughout the course of the day. Okay. Sell a couple calls, sell a couple puts, right? Look, I was in the strategy, I was out the strategy, I'm back in the strategy. I'll sell a couple things over here. And as the stock oscillates, and this thing couldn't have been better for today, as the stock oscillates throughout the course of the day, I'll get in and out, okay, a half a dozen times. This, again, this is what trading is, right? This is what we try to really emphasize to the clientele of TheoTrade. And you got to decide, though, if the right trading logic coupled with a quantitative approach, okay, is what you've been looking for. As I said, a couple of our members are saying over here, and I only put the ones in there that I really appreciate. Okay, and this is a new member, been lurking here in chat for about a month, was short the SPY. TheoTrade's the only membership that I've ever had that pays for itself. Okay, you won't find a more supportive and more profitable trading room anywhere in the retail business. Okay, listen, what we did here today, I'm just hitting like a little smattering, if you will, of some live trading. Okay. And as I said, this is something that we do every single day. I mean, we trade live and I trade with people every single day. I do at minimum, okay, an hour and 10 minutes every single day of live trading. At this point, though, this is a great time, especially right now coming into the holiday season, because a lot of people are going to be sitting at home. I mean, most people are never going to have time like this again. All right. It's a great skill set to learn. If you're still working, do it part-time. Okay. If you're quarantined, it's a great way to actually, come out in good financial shape. And again, I don't want you to be under the impression that today is going to take a huge amount of time, because the stuff that I'm showing here today, it's actually really hands off. As I showed you, like in Tesla, I set the order and kind of walked away from it a little bit there and it filled. I set the order in the spiders and it filled, right? And again, I don't want to sit here and babysit these positions. You can use even GTC, which is good till canceled orders. Like, one of the things you got to remember, especially about intraday options. Now, I do a lot of strategies outside of intraday, okay? But the attributes of intraday trade and really with quant analysis, it's undeniable. It's really minimal capital exposure, okay? You got weekly options offered. And by the way, somebody always inevitably, and I want to actually address this for a moment, somebody always says, I can't trade intraday. Think about this. They say, I can't trade intraday because I only have, for instance, $2,000 or $5,000 in the account. This is no longer an issue, okay? They have come up with micro options, okay? Micro options on futures contracts. Basically, okay, they're little guys of the spiders, and they do not have the day trading margin restriction. So if you're ever like, I can't trade, right? I can help you be able to trade even with like a $5,000 account. And again, it's not trading futures contracts. They're options on futures contracts. They're the exact same as the spiders, but you can have a couple of grand in your account, right? And it's going to offer you the exact same attributes as you would get in a standardized option contract, but with less risk. And again, all of this offers viable risk reward. Risk is limited to precisely your comfort level. There's no need for stop orders. Somebody was like, when do you get out over here? It's pretty easy. Okay. If the marketplace will move up another $2, as I said, we actually can show you the probabilities behind when to get in, when to get out. All of this stuff too can be traded in your retirement accounts, avoids sheer magnitude from futures contracts. Futures contracts can be a wonderful product, but it is not a good place to start to learn to trade. And I'm going to say that again, futures contracts is an incredible product. Okay. Me, love them. I've traded millions of futures contracts. All right. Millions of futures contracts. You do not want to learn here, because I'm going to tell you, I worked in the brokerage industry for 15 years. This ain't a good place to learn. Options are the place to learn. It's going to be a softer, gentler, easier way to get where you want to go in this business, right? Trades, you don't have to continually monitor them. Trader can produce returns far beyond the max risk. So that's one of the things I wanted to present to you. Somebody said, when do I get out? I put in $2.10 in the option that I bought. Okay. I can't even lose the 210 because that option doesn't expire today. It expires tomorrow. So what do I really have in risk here? Maybe about $1. Okay. So if I have $1 at risk, all right, whatever. I'll just close it before the close today. And I will. I will literally close it before the close, today. I'm not even concerned with the risk because it's such a negligible amount of risk. Again, it's an excellent tool if you're trying to build returns in a smaller account, but it's also viable in a larger account. Listen, you got to learn how to build the intraday options, but don't let options intimidate you. Just please do not let it intimidate you. There's a little bit of a learning curve, okay? And you gotta start somewhere, but you got to understand you do have to spend some time to learn some of the basics of options here. Like there's no question that you have to go through and understand a couple of nuts and bolts, right? Like everybody though can trade this today. And I'm telling you right now, do not let the options intimidate you. You're going to need these strategies for the foreseeable market future. And we can show you how, and we can show you when, and we can show you why to do this in a matter of a couple of hours. And that's what we do here at TheoTrade. We create detailed recipes for every strategy, including intraday options with quantitative analysis. And that's basically like baking a cake. Like, listen, this is what you're going to need to know to successfully enter and exit intraday option strategies. Okay. First, you got to know what makes a viable intraday candidate. Like why the spiders, why the IWM? You saw me trade a little bit of Tesla, but Tesla's scary. What volatility should I seek out? And somebody said like, hey, what's the most important parameter? Volatility is important, right? Like we traded a couple things today, one of which was Tesla. Tesla's big, scary, ugly, big teeth on it, 100% implied volatility, 108% implied volatility. You got to know what volatility, because what volatility determines what options expiration do I select, okay? A moment ago, we were talking a little bit about the spiders. When you look at the options expiration, okay, behold, there's a 1 day, there's a 3 day, there's a 6 day, there's an 8 day, there's a 9 day, there's a set hike, okay? You want to get even crazier? Go look at the SPX. The SPX is like the mother of all products. Look how many option expirations are in here. Like it's just a hideous task, okay? And this is the kind of stuff that it doesn't matter what product you're trading. As long as it's a liquid product, you have to be able to zero in though on the right volatility, the right options expiration, okay? What should be the delta of the option you buy? By the way, every single product that you trade, open up an option chain, okay? All of them have delta. All of them have delta. So I traded basically a 60 delta over here. I go to the IWM. If I was going to do a position in the IWM, you know what I would go after? A 60 delta over here, which is trading almost the same price. If I went to Microsoft, okay, and I looked at Microsoft, I go right to like a 60 delta in here, okay? It's all the same. You got to know the right delta, the right volatility, okay, the right expiration, okay? What market factors do I look at before entering into an intraday options position? Can I do this in an IRA? Of course, you can do it in an IRA or retirement account, okay? How do I build the trade? Like physically, how do you build the trade? It's more than just hop on, the platform and click on it, okay? You got to structurally understand what you're doing, what price to get in, what price to get out. In fact, what's the right amount of risk for you? Let me show you exactly what we do here at TheoTrade. We create recipes in trading, okay? And when we say recipes in trading, I always say, would you like to learn how to create consistent intraday strategies and setups, okay? So let's discuss a little bit about criteria. Criteria is a recipe, and you're gonna learn that trading is all about answering the what ifs. You're going to look at what might be a good stock or ETF candidate. What's the correct options expiration to lower the risk? How much capital do I commit? Strike price. Okay. What about the day trading margin restriction, which I just talked about, and growing a small account? What should my allocation be? We have those answers. So what we actually do is we build these checklists, and the checklists literally say step 1. Okay. This is how you select a candidate. All right. Step 2, based on liquidity. Step 3, what's the volatility supposed to be? Step 4, what's the delta supposed to be? Step 5, what should my allocation be? Step 6, okay. And we just go and go and go and go. That's just the selection criteria for the entrance. Okay. And what we actually modeled these checklists off of is just like a pilot. Okay. A pilot looks at a checklist before taking off. This is basically a pre-flight checklist. But then after you get into a particular strategy, like somebody asked me a moment ago, when are you going to get out of that spider strategy? Okay. When am I going to get out of the spider strategy? Okay. But still my heart, I'm down about 30 cents on this one, down 30 cents on that one. But actually Tesla is doing quite nicely right now. Right. So when do I get out of it? How much risk do I take? All of that are variables that we define. Okay, that's what we're talking about with unique variables. What if we start coming close to the bell? When am I going to get out? Do I hold the position overnight? TheoTrade has the answer to those questions. Give you the right probability. How many option contracts? When do I close the trade? What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Okay. It's literally, can I fix a losing trade? It's about the how, the when, the why, at what price. And people, I'm telling you, it's just the beginning though of the variables. It's literally the beginning of the variables of an intraday analysis. You can read what options are, maybe even know how to build. And a lot of you guys have actually traded intraday. And again, maybe, okay, you really did, work on this. But I'm telling you, what you need is TheoTrade's recipe. Okay. I've got 20 plus years trading experience. I had access to client order flow for 15 years. So you have to understand the checklists that we've built, okay, are based on some of the nuances and the flaws that we studied back at both Thinkorswim and TD Ameritrade. And going back through all of the data over there, listen, we viewed and studied millions of trading accounts. I ran education for 15 years. We had 7 million traders, okay, when I was working at TD Ameritrade running the entire education for them. And we studied, as I said, every single nuance, okay? That's where the criteria really comes out of what we teach here at TheoTrade. Criteria is the recipe for success. It's not just about, the option, which one do I buy? Which one do I sell? It's going through and, okay, methodically creating the same trade again and again and again and again, all right? Listen, the following strategy and the corresponding criteria requires the utmost attention to detail. And we spent years, literally years, fine-tuning this trade setup, okay? And you're gonna learn that you have to follow the steps to be able to build a trade. We do a course on this particular, genre of trade. It's consistent intraday strategies and setups. Now, before anybody freaks out, okay, as I told you guys, and I'm very forthright with everybody right up front, okay? What we do here at TheoTrade differentiates from any other educational firm out there, period, okay? We do not go out and sell one class. We do not believe in it, and we will not do that, okay? And when I say that, this is a 4-hour course. I'm the trade instructor. This particular course, it's already ready to go. So if you want to learn a little bit more about what we did today, here's the class. The class is 4 hours. The class slide deck that has all the entry and exit criteria, you can download it immediately. It's ready to go, okay? The course is also archived, and you can even download the course from TheoTrade Mobile, okay? But as I said a moment ago, we don't ever go out and sell one individual class. By the way, here's some of the curriculum. So hang with me for a couple of moments, because this is where people are like, well, what do I have to do to get the class? Okay, I'm going to show you that in a second. I'm also going to provide you the indicator that we discussed a little bit earlier, which is the Quantix, okay? The class, consistent intraday strategies and setups. Here's the curriculum. It teaches you how to create intraday trade setups that put probabilities in your favor, minimize risk, maximize returns, how to analyze markets. That's that quantitative kind of slant to it. We'll give you the right options setup, detailed step-by-step entry and exit criteria, how the market provides predictable or manipulated ranges. In this class, you're going to learn a lot about expected move. We're going to give you little known market insights as to what drives markets. We're going to talk a little bit about futures, not because you're going to trade futures, but what drives flow, drives order flow, tools and strategies for analyzing the market conditions, how to minimize risk and maximize returns, okay? How you can generate returns intraday, very small accounts, all right? Which stocks and indices are going to make the best candidates, which strikes, what options expiration are going to give you the highest probability, when to open, when's the best time to close, what market correlations to watch intraday, okay? And why intraday trading does not have to mean that you're glued to the screen all day. All of this, okay, is kind of encompassed in one course. And it's important that, I kind of delineate that again, there's no way in, 90 minutes, I would love to explain everything there ever was about intraday trade. And I'll tell you right now, I'm no holds barred. I will answer every single question pretty much until, I pass out of breath over here. But I'm telling you, okay, structured courses are phenomenal here at TheoTrade. And there's just nothing like this in this industry. What our members are saying, okay? This comes from Canon, blacked out his last name, but not to brag, but this is due to you and your magnificent team. I'm up 1.67 million in profit, okay? I don't like to throw, big numbers out there. Listen, this guy Ken trades big, but I told him, I'm like, pull a big hunk. He said, yeah, I'm going to pull a big hunk of that out of my wife's account. Plus I'm going to give my granddaughter $50,000 to work with on her master's degree. Okay. I'll let you know how the trade goes. Anyway, thanks from the blank family, from Ken's family. And along the lines of like one course, as I said, okay, what you need to understand is that TheoTrade is not about one class. It's not about one indicator. We give you everything at one place and at one price. Okay. And this is what I started with today. And that's why I said, hey, you stick with me here because we don't do memberships here at TheoTrade. We give you everything from day one. Okay. The first thing we actually grant you access to is 97 trading classes. Like today, now, you get 97 trading classes. It's everything we've ever done since we started TheoTrade. And the first class, obviously, that we've discussed today is intraday strategies, right? Consistent intraday strategies. We also give you access to every other class that we've ever done. Because I'm going to tell you right now, you're going to go out and people are going to charge you $500 for a class and $500 for a class and $500 for a class, then $500 for an indicator. Before you know it, you're going to pay 5 or 6 grand for crap. How about we give you every class? By the way, we even send text messages to you. We trade live with you every single day. This is no holds barred. It's the only way that you're ever going to learn this business. Because if somebody nickels and dimes you, because I'm going to tell you right now, we have over 6,000 clientele. If somebody nickel and dimes you, it's because they're not making money from trading. Okay. We have traders. We don't sit here all day and pitch to people. I told you guys already, 3 months of TheoTrade, it's only $297, and it gives you access to 97 classes. Okay. We have volatility back spreads, how to collect income being short, the risk twist spread class, in-out spread class. By the way, the in-out spreads class, unbelievable. Bar none, that more people have watched the in-out spreads class than any other class, okay, almost combined. The in-out spread is the most prolific class we've put together here at TheoTrade. Iron condors, and please, I didn't do all 97 classes, okay? We have Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Everybody has their own genre. I'll just give you, when I say genre, Jeff Bierman, he was the former chief market technician for TD Ameritrade. He's also a professor of finance at DePaul University. He's a CMT. Corey's a CMT. Brandon Chapman's a CMT. We have 3 CMTs on staff now. We also just brought on Blake Young. Blake Young also worked with us at TD Ameritrade. This guy actually comes from Thinkorswim and TD Ameritrade. He comes from Thinkorswim, TD Ameritrade. He comes from Thinkorswim, TD Ameritrade background, right? There is no one, as I said, in this industry, bar none. I don't care what educational venue you go to, nobody stacks the deck like we do here, okay? There are 8 full-time instructors. Everyone on this team has a minimum of 15 years plus trading experience. Most, okay, former market makers, hedge fund managers. I mean, Blake Young, he's our newest, like I call him an acquisition here. He's market profile, futures, currencies. We got a macro guy, which is Brandon Chapman. Corey is our senior strategist and swing trader. Matt is a premium selling guy and options. Okay, Slim Miller. Slim's been trading for almost longer than I've been alive. In fact, it's coming pretty close to that. He's actually kind of our in-house psychologist and resident cyclical analysis. We got a guy, Tony Rago. He just calls out strategies all day. Here's a setup, here's a setup, here's a setup. He just trades NASDAQ all day, every day. By the way, this is kind of what the crew here looks. That's Corey, that's Tony, that's Brandon, that's Jeff Bierman, that's Steve Miller. We all hopped on a call the other day. It's Blake Young. It goes on and on and on and on. The entire crew is in here. Even I'm in here. Yeah, I'm sitting in the gym over there. The second bonus we have over here, we give you 3 months unlimited access to our live trading room. So you trade live with us for the next 3 months. We give you a text notification, push notification. We have 5 different trading portfolios that you can follow. We do daily coaching sessions. Coaching sessions are continued education. Those continued education, that's predominantly done by Jeff Bierman. Jeff Bierman, again, he's a professor of finance. So, you can pay $42,000 a year to go see Jeff, ironically online at DePaul, or you can come right here to TheoTrade. Oh, the other huge thing, I don't know anybody else that does this, but we will directly answer your trade questions via email. When I say trade questions, trading questions, you can email us. You don't have to email us and be like, so hypothetically, okay, listen, most of us actually came from the brokerage background, okay, professional market making background. We know how to answer your trade related questions. If you have a trade and you want to bounce some ideas off us, hit us with it. Seriously, hit us with it, okay? We also give you 59 proprietary indicators and scans. Today, I'm gonna give you Quantix here in a couple of moments. So just hang with me and I'll give you Quantix. We have auto expected move, gravity points, RSI Laguerre, okay? Any of the proprietary, okay, stuff that our traders use, you get from day one. We don't sell you indicators because that is garbage. It's garbage, right? If we're going to trade with it, you need it, plain and simple. That's the way we operate here. The third bonus that we give you today, there's a class coming. It's this Saturday. It's one of the reasons we're actually hosting this live trading event. Okay. Blake Young is doing a class this Saturday, December 19th, 9 a.m. to 12 p.m. It will be archived immediately when it's done. I would suggest attending it live. Why? Because there's nothing like seeing the live dynamic from Blake Young. It's called the Ultimate Guide to Trend Trading. You're going to love, like, he's our newest instructor here. This is now going to be his third class. Guy knocks it out of the park every single time. I've known Blake now for over 15 years. Ultimate Guide to Trend Trading. I'll show you which indicators to use for precise entry, how to use volatility indicators to minimize your risk. Okay. One signal to identify reversals. He's really big. This class is heavily about reversals, so you can find tops and bottoms with a higher degree of success, okay, and how to integrate Blake's 3 go-to systems into one chart analysis on any trading application, okay? What we do here at TheoTrade, it includes everything that you're going to need to invest in trade. We do classes, we do coaching, you have email access to the instructors, you have a live trading room, live trades, indicators and scans. As you guys know, we're not afraid to trade in front of you, okay? And again, I suggest that you email us. I suggest that you join us for live trading. And if you can't sit here all day, everything is available to you, okay? 24/7. You can play anything back, okay? You can look at the portfolios. It's everything you're gonna need to succeed. We literally built the Netflix for traders. It's $297 for 3 months. That's it. And that's why I started with that, because I don't want there to be a surprise, okay? It's $297. Listen to me. That is not an introductory price. This is not a membership. It's $297. If you want to do it after 3 months, it's $297. We don't change it. Okay. That's it. It's $297 for 3 months. You go to theotrade.com/day to enroll. Again, it includes the consistent intraday strategies, access to 97 trading classes. There's new monthly classes, of course. Blake's class is what? It's this Saturday. I'm telling you, that's a reason right there to go for it. Okay. He's awesome. Most people are going to charge you $500 a class. You get Blake's class and everything else. We do a live trading room. Okay. We're going live tomorrow morning. We're live 6.5 hours a day now. Indicators and scans, text and push notifications, 5 different portfolios, daily coaching sessions, and you can email us. You know, it's worth 3 months of this if you just emailed us a couple of times. You can bounce ideas off of this. Okay. One last aspect to do this, to make it, you know, straightforward for everybody. We make TheoTrade a completely riskless deal. We want to make sure that everybody's happy here. We have everything you're going to need to start trading, from just novice to expert. We'll give a money back guarantee on it. Trade with us, but you have to trade with us over the next 3 months. If you're not satisfied, just email support@theotrade.com. Give us the details of your trades, receive a full refund. There's only one stipulation in here, okay? There is one stipulation. You must trade. That's all we ask. If you're willing to trade with us for the next 3 months, if you're not happy, okay, we'll just give you back your $297. People, it's $297. We already have over 6,000 current clientele. You got to do a minimum of 10 trades using any of our trading strategies. Remember, there are 97 different classes here. Your initial account value has to be $2,000. You got to follow our criteria. Follow our criteria. Okay. And then we ask, you can't paper trade. You have to provide real account statements. By the way, the only reason we do this, okay, is because we don't want people coming here paying $297, stealing a bunch of the criteria, downloading everything. Listen, if you're going to pay the $297 and you want to learn something, do 10 trades with us over the next 3 months. I don't even quantify what satisfied means. Okay. If you ain't happy, please take your $297 back, because I'm telling you right now, we want clients here, okay, that are going to be happy. That's what we're about, right? So get into TheoTrade now. We'll work with you guys directly. We have 30 spots on the riskless trade deal. And I'll read off everybody that gets into the riskless trade deal. By the way, for today, all right, we only do 30 spots on the riskless trade deal. Because I have to personally, I will go through and I will look at each and every one of your trades. If you send me your 10 trades, okay, can't look at more than about 30 people before I'll go absolutely blind. So send us your trades. The 297 riskless offer, it's never been available before with consistent intraday strategies and setups. Plus, you're getting Blake's ultimate guide to trend trading. Okay. And again, if you're not happy, we get it. Just it's totally riskless though. You get your $297 back. You just have to trade with us. Okay. You go to this site right now. Again, it's TheoTrade.com/day. I'm going to answer some questions for you guys because again, I want to keep this as dynamic as possible. You know, I could have sat here and traded the rest of the entire session, and I do on a day-to-day basis. In fact, I'm looking at markets right now. You know, since I've started here, we've actually moved from we were up 41 and now we're up 46. It's been fairly quiet right now in terms of a day. It's ironic because the only thing is moving a little bit is Tesla inside of today's trading session. But yeah, doing a live trading class, I know I couldn't necessarily pick the perfect market conditions. You're never going to know. Again, you get everything today for $297. Every class, the consistent guide, you know, to strategies. Blake's class, the ultimate guide to trend trading. So I was saying, you know, I'll read this one off and then I will jump right in. And oh, I promised you guys the link. Okay, let me make sure I give you guys the link. So here, this comes from Curtis. Please allow me to impress upon you how incredibly valuable your first hour in the chat room was today. Your true concern for the welfare of your clients, listeners is unmatched in the industry. Okay, and you gave an incredibly practical advice for those feeling pain, almost as if you were their personal trading coach. It was amazing. I only wish, okay, all of my, I don't want to sell in case this keeps going higher, friends were listening. Keep up the great work. This comes from Curtis. He's a formal institutional portfolio manager, and there's a lot of professional traders, professional clientele that are now part of the TheoTrade, you know, kind of group here. So go to theotrade.com/day. In fact, I'm going to take you there really quick because I do want to provide to you exactly what I had mentioned a bit earlier here. So let me pop this in here and make sure everybody's on the same page. If you would like the indicator, okay, if you would like the indicator in here, again, there are currently 30 riskless spots left. Go to theotrade.com/day. For those of you that are enrolling right now, just click add to cart. And the only reason I'm clicking on here, I want to show you for a brief moment as you kind of scroll down, okay, scroll down. Again, it's $297. It's just a single payment. It is not a membership, and I'll reiterate that 20 different times. Actually, you can do two payments of $149 apparently as well, okay? And that gives you access to everything that we do. And I don't want there to be any if, and, or but about it. This is for consistent intraday strategies and setups, but it also gives you access to 97 other classes. And in fact, if you want to see what the classes look like here, okay? Here, option strategies, option newbie classes, technical analysis, day trading, okay? By the way, if you know absolutely nothing, we have what they call a start here menu. Options 101, 201, 301. Got to get you guys ramped up to this, right? So if you want to see what the option classes look like here, option strategy classes, today you enroll, you get access to everything that's in here. Like it's our entire library of classes. As I said, it looks almost like a Netflix where you're kind of scrolling through, you're like, I don't even know what to watch today. This is going to be good. All right. Back spreads, pretty good one. All right. Tracking unusual options activity. People love that one. It's actually Brandon Chapman. Controlling your risk. That's me. All right. Black book spreads, Matt Williamson. Okay. Consistent small account growth formula, me. You know, selling options for a living. That's me. Duration iron condors, me. Right. This is my area, people. I am the resident options geek here. You want technical analysis classes? You got it. Okay. Very large part. This is a huge amount of Jeff Bierman's work. Oscillators. Okay. How do you read charts? Pattern recognition, trade triggers, DMI class, price retracement, which are like Fibonacci's. It goes on and on and on. Okay. If you're into like, you know, mindset, need psychology classes, we have classes in that as well. Plan to get slaughtered, 5 essential building blocks to successful trading. I'm telling you right now, there is nothing in a genre of trading that we don't offer. I even do classes on pairs trading, futures and bonds, okay, hedging strategies, right? This is your one place to get everything you're going to need in this business. And that's important that you know that. Anyway, let me answer a couple of generalized questions in here as they come in. Go to theotrade.com/day. Again, theotrade.com/D as in David, A as in Apple, Y as in yes. Okay, to obviously to enroll for this. Oh, one other quick aspect. If you have questions, right? You're like, I'm a little nervous here. Just call right now. Okay. This is actually a phone number that we set up specifically, okay, today. This is not even our general office number. We set this number up specifically for today because we have a huge number of people that are on today, but you can actually dial this phone number. It's 623-244-5657. That number is literally for today and today only. If you have any, definitive questions about what's coming up over here, for those of you that are comfortable, just go to theotrade.com/day and enroll now. As I said, I'm going to answer some general questions in here, okay, and then I'm going to answer some very specific questions. And when I say general questions, you could pop over here, a couple of other comments from some clientele, but here's some questions. What do you need to get started? I think we have everything you're going to need to get started, from absolute novice to some of the most extreme traders. Again, it's $297. And we, as I said, if there's something that you need in this business, okay, we at TheoTrade, it's our job to provide it to you. We'll even give you suggestions on broker dealers, right? That's what we do here, and it's what's important. Okay, so I don't even think you have to have a laptop anymore. You can probably do all of this off of an iPad, an iPhone, whatever works for you. The second thing is, this is not a membership. We don't do memberships anymore. It's a $297 one-time charge. Okay, I always throw that out there. It's $297, and again, it's a one-time charge. Okay, we're now providing weekly video updates, so you can follow all the moves that we make. I didn't even mention that earlier. This basically is for those of you that cannot sit and trade all day, every day. We actually have a lot of trades that we do that you just sit with them. And then, they're a little bit more boring, but that's okay. It's okay. So you just sit with some of the trades and monitor them, as time goes on. All right. Oh, by the way, I'm going to give you Quantix here. Totally forgot. Let me get through this and I'll give you Quantix here. Okay. TheoTrade archives everything. People always ask, I can't watch everything. We archive everything, every single word. We understand you can't watch live, so we archive everything. We'll also provide you access to TheoTrade Mobile. It is for, iOS and of course, Android. So we have a mobile application for iOS and Android, and you can actually download the archives and watch them. Oh, add your cell phone number. Oh, I forgot to mention that as you're enrolling, and I can see a lot of people enrolling right now for this. As you are enrolling, put your cell phone number in down below here. The reason I'm saying that, it will automatically enroll you for text messages. Please, there's not a lot of text messages, so don't freak out on me. We don't do a ton of text messaging. Okay, we do a couple trades a week that we send out because we realize people do not want to be bombarded by text messages, right? Number 7 over here, you can email us anytime. Now, I'm going to tell you something right now, and I've said this a couple times tonight, or today, I should say, and I reiterate it all the time. It's $297. Okay, you can email us anytime. It's worth TheoTrade just to be able to email us, and you'll see. I'm telling you right now. You go to support@theotrade.com. If you have a trade-related question, email me. Don't do it until you email me. We can't get back to everybody in 10 minutes. You got to give us 24 hours. So give us a little bit of leeway. But if you got a question, right? Listen, none of the brokerage firms, not TD Ameritrade, not Tastyworks, the Charles Schwab, E-Trade, they're not picking up the phone anymore. These people aren't answering trade-related questions. We're it, okay? And we think for $300 for 3 months, it's a pretty good deal. It's a pretty good deal to be able to ask again. And most of us have a lot more experience than some kid that's on a trade desk over at TD Ameritrade, right? And I think you guys will see that right away. Number 8, you're going to gain access to every course. Everything we've done. Now it's actually previous 5 years. Now we're 5 years here, including classes, coaching, live trading sessions. Every archive is searchable. Name a trading topic, we have an archive on it. All the trades that you've seen can be done in an IRA retirement account, okay, with as little as $2,000. We also can help you get approved for options at several major brokerage firms, so don't freak out about that. And there are 30 riskless trade spots available to you, 30 riskless trade spots. And that basically means you have 30 spots that are available to you today to enroll at 297 and be availed to the riskless trade offer. Listen, you're going to love what we do here at TheoTrade. Speaking of TheoTrade, let me take you back over to the site for a second. For those of you, okay, if you go to theotrade.com/day, scroll down to the bottom of the page, there's actually the Quantix indicator. That's the Quantix indicator, all right? So it is available on here. As you are enrolling for this, you need not, okay? You need not download the indicator. We have it on the site for you. Again, just theotrade.com/day. Let me answer now some really specific questions for you. When I say specific questions, like these are questions that have actually popped into the room over here. Bear with me here for a second as I pull these out. All right, where to begin in here? By the way, I will read off names, okay, of any of you that are enrolled that actually are in the riskless trade offer. And again, I'm reading some of the questions kind of coming through over here. So, oh, I like this first one from Jay. Does the checklist variables also vary based on account size? Absolutely. Okay. The classes themselves, okay, absolutely vary based on account size. Okay. So not a problem whatsoever. The classes themselves are actually built in a dynamic fashion. So you have that. All right. Somebody else said, Sybil said, can you sell naked puts with a $2,000 account? All right. So I'm supposed to say, absolutely not. But actually the truth is, okay, you have to have a little bit more than that. All right. And you can do it technically with an options on a futures contract that does not tie up nearly as much capital. But I'm going to just tell you on the side. Can you do it? Yeah, at certain brokerage firms, the answer is yes. Do you want to? Not unless you have at least $5,000 in the account. Because I'm going to give you that is the definitive answer. Unless you have $5,000 in the account, you probably don't want to actually sell naked puts over there. But there's no reason to have to sell naked puts. Okay, you can come in here. All right, you can come in here and you can get definitive education to not have to go out and to sell those naked puts. I hope that's okay. Quantix does not work on Thinkorswim mobile. That's fine. That's okay. Not going to be a huge ordeal. However, rumor has it that they are kind of building that in there. So continuing on over there. Oh, somebody said, can you please mention there's it's not 5 different trading rooms. There's 5 different portfolios. Okay. This is TheoTrade. This is what TheoTrade looks like. In fact, you guys want to see here? I say, this is TheoTrade. We're live right now. We're trading.
But like this would have got you guys out of this.
Now I'm going to mute that. This is actually Tony Rago.
Was supposed to do. It's just, it's a byproduct.
So Tony Rago is actually calling trade setups right now inside of the NASDAQ, and he's live. And when I say he's live, this is live. This is TheoTrade. We're during the trading day. We broadcast 6.5 hours a day. I'm over here in this room. Okay. Obviously, Tony is in the TheoTrade live room. Here's all of our clients, obviously conversing back and forth, right? You can load up, earlier messages in here. Okay. All of these are trade setups that are being called out. You can see things that are highlighted in here. It goes on and on. All right. This is, again, it's pretty full on chat room. As we said, we were talking about, here's Blake's class. Blake's class, Ultimate Guide to Trend Trading. I mean, there'll be, 3,000-4,000 people live in that this Saturday, right? That alone is well worth the $297. I'm serious. You guys are absolutely going to love what he's doing in there. Anyway, this is live right now. When I say live, it's, he's trading right now. If you take a look at the NASDAQ, it's at 12,572. These are actually some of his trade setups. So that's exactly what TheoTrade looks like. Apologize for not popping in there and showing you that a little bit earlier. And Tony's in there all day, every day trading. Now, the question that came in, somebody said, what about different portfolios? Black Book Trader, Duration Portfolio, Infinity Trader, In-Out Spreads, Sell Premium, TheoTrade Tracker. 5 different portfolios effectively, okay, that have newer trades in them. We haven't been that active selling premium lately, okay? But again, those are the different portfolios. The archives, there's a class archive, right? Jeff Bierman has a specific archive. It goes on and on. There's just so much in here. I actually like, and I like to show people this. This is a searchable archive. You come in here, name us like anything you can think of. In, okay, out. So when I say in out, you're like, well, what's that? It's one of the huge strategies that we do here. Happy hour, swing trades of in out spreads, ins and outs of in out spreads 2018. Anything that mentions in out spreads, okay, will populate when you search for it. And that's obviously what the search engine is effectively designed for. So, all right, I got that one. I got that one answered. Again, go to theotrade.com/day in here. By the way, a few names are actually popping in here. Delta V from Florida, KT from Colorado, Stephen R from Georgia. I'll continue to read off a couple of names as we pop them in over here. All right, the next one over there. Each day in your trading room, okay? You know, do we trade for approximately 1 hour? I trade for an hour, okay? But then we trade for about 6.5 hours each day. So we trade for about 6.5 hours each day inside of the trading room, of which I'll say that about an hour of that is actually reserved specifically for some education. All right, continuing on over here. Let me continue and answer a couple of questions. All right, in Canada, trading costs. By the way, if you're Canadian, feel free to shoot us. If you're Canadian, feel free to shoot us an email. We can give you a couple of suggestions. Okay. Okay. If you're Canadian, feel free to shoot us an email. We'll give you some suggestions for some brokerage firms because I think that that's also of critical importance in here today. So by all means, we can give you a couple of suggestions. All right, I think I got most of them because we're actually typing in. A lot of the answers to this, and hopefully we've got everybody answered. All right, let me just scroll back in here. Okay. Yeah, we got almost everything here. Okay. By the way, there's commissions on options trades. There are commissions on options trades. There are not commissions at TD Ameritrade on stock. But again, the brokerage firm that you use is completely up to you. By the way, Angelina D from California, Robert G from Oregon, Dennis J from Florida, Mike Q from Washington, Tina C from California. Thank everybody for kind of tuning in today. And again, there's a lot of people obviously enrolling for some of our riskless spots over here. By the way, yeah, you know, somebody said, why have you not been active selling premium? Okay. The sale of premium right now is not nearly what it once was. There's actually much greater opportunities. This is a big portion of what we cover here at TheoTrade. Listen, I want to thank everybody for tuning in today. If you have any questions, okay, just dial right now the 623-244-5657. You can always email us to support@theotrade.com. All right, to enroll right now, go to theotrade.com/day. Listen, I know I've gone a little bit over in time. I want to thank everybody for tuning in. Have a wonderful afternoon. Bye-bye.